Construction group Aveng announced that it proposed amending a black economic empowerment transaction entered into in 2004. The original deal saw the introduction of BEE partners into Aveng's African operations. The proposed deal will include Kagiso Diso Holdings, which is the merged entity of Kagiso Trust Investments Limited and Diso Group Limited.
Aveng market cap 14 billion, making it one of the bigger construction stocks these days. Price earnings 11.6, dividend yield of 4. Gerbrand, let's start with you. The first place I've been going to when these guys come out with their numbers is their operating margins. We've seen them under pressure down at 4.3, not quite the pressure that we see with the Murray and Roberts and the like. They're a whole different game entirely. But what we are seeing, and it's consistent across, their Australasia, Pacific Rim margins significantly smaller than what they're getting in the rest of the world.
Yeah, certainly. I think the currency probably has to do with that as well. But if you look at the latest numbers that they brought out, the first half of the year they were actually getting a margin of only 3%.
Yeah.
In the second half of the year they were actually getting better margins of about 6%. So not all looking too bad.
I was going to say, is that enough, or is that maybe just one swallow who's a bit late?
Yeah, it looks like that. But I mean, the margins has contracted from around 8% to about 5-6%, and that's an industry norm out there. Luckily enough, they've had a lot of cash on balance sheet, so they're still paying the same dividends as they did in the previous years, which they were pumping cash out of their operations. But one negative aspect is, of course, net operating cash flow, which is negative at the moment.
That's been hurting them, yes.
Paul, let's focus on this BEE deal. Aveng already had a very favorable BEE status. So the question then is, why would they need to propose an amendment to the original deal? And secondly, in view of the fact that BEE transactions tend to have a dilutive impact, this is not something that shareholders are going to welcome easily.
Well, I agree. It's not something that shareholders will welcome easily at this moment in time. But I think most companies, especially within the space, are looking for transactions that are going to make them look more favourable in the eyes of government, firstly, and obviously to look more favourable in the eyes of their partners within the industry. So I think this step taken by the company is positive from that perspective, and although it might have some dilution in the short and medium term, I think in the long term it's definitely going to benefit the organisation.
Paul, you mentioned government. The one thing, and we mention this, I think every time we talk construction, every February the President and the Finance Minister talk up, they mention 800 billion, and you go out there and the construction guys are saying we're not seeing it, and in fact they're saying their order book is now 80% in favour of private sector. We're not seeing this government money flowing.
Yeah, I think they've struggled, especially after the World Cup. A lot of that has dried up, and a lot of it is being held up, I think, in a lot of red tape in government at the moment. And we've seen some companies also looking to cancel some of the private sector and public placements or transactions, and because they've cost them a lot of money, and nothing has actually yielded from government. But I think hopefully in months to come we might see flow coming out of the government sector.
Gerbrand, in March this year, Aveng announced that they are going to be forming Aveng Water, which is going to be focused specifically to the mining sector. And unlike their rivals, Murray and Roberts, they haven't had to sell non-performing assets, and they also haven't had a rights issue as yet. What is the secret behind Aveng's strength, and how are they weathering the current dire market conditions?
Yeah, I'm not too sure. Probably management did a better job in the downturn than what Murray and Roberts did, and their businesses were maybe a bit more resilient as well. Yeah, the Gautrain, you must know, they took a lot of money away from Murray and Roberts, and there's still a few disputes, so there was a lot of impairments. And so going forward, they might pick up again. But from the Aveng side, I mean, you got a bit of manufacturing in there with Trident Steel in there as well. You got 30-40% in business in Australia. So that makes a bit of more diversification, I think, from their cash flow revenues, etc. And as you said, the mining now, I think that comprises about 10% of the order book going forward. So I think they did very well, although their earnings have normalised a little bit. They're down 40% over the last 3 interim statements that they brought out. So going forward, I think that's the main story. Are we still going to see these depressed markets? Are the markets already pricing in the negativity as until now? And
okay, I'm going to throw that back at you because we asked the questions. Yeah, construction. I mean, the cards on the table. I thought we would start seeing a pickup by this point. Not so much in the construction activity, in the share prices. It isn't. It's looking like now construction's probably going to have a tough 2012. Are we seeing lights at the end of the tunnel that we are sure aren't trains, or is it still really tough out there?
I think it's tough out there still. There's a lot of uncertainty again in the global village out there, We all know that over the last 3 months, especially European debt crisis, etc. So that probably takes orders away from these guys in the short term. So we were also expecting the market to probably realize that in 12 or 18 months the picture is going to look a bit better, and these share prices should already been going up. But we'd had a dipping JSE as well, so some of the other shares we gained probably more value than they were 6 months back.
Second, you could buy Britain on 7.
There's something else that you can buy at a PE of 7 multiples and decent dividend yields as well. So I think it probably took a bit of shine away, but I think in time you're probably going to make your value out of your long-term holdings here.
So Gerbrand, what's your vote for Aveng, hot or not?
I think hot, especially with a lot of offshore operations as well. We know that the currency is weakened about 20%, so that would help them in the short term until the rest picks up. Although it's on a premium on P valuation, etc., against the other peers. But if 5.4 billion rand in cash on the balance sheet of a 14 or a 15 billion rand company bodes well for going forward. And not a great business to be in the long term. But from a cyclical point of view, this is the time when you want to buy these assets.
You buy it at the bottom, sell it at the top.
So I'm going to go for hot. Yeah.
Hot for Gerbrand. Paul, how did you think?
I think hot as well. I agree totally with the rest of the guys. I feel this is the right time to be getting into some of the construction stocks, and I like the diversification that Aveng has at the moment, and especially getting some cash offshore as well, which is looking good.
Hot for Paul, and he says this is the time to be getting into construction. So Simon Brown, is Aveng going to come back with a vengeance when this construction sector turns around?
I think it is. I think to you, I mean, as Gerbrand said, I think, management is in part shown us. Yes, numbers are down, but that's because it's a really, really tough environment. I think they've done well. Price earnings, almost 12 in a historic, that's a big number, which is not great, but they're paying a good dividend yield of 4. They're paying me to hold it, and they're sitting on 5.5 billion cash. So I think that dividend yield is safe. So in the sector, they're paying about the highest dividend yield, which means I'm prepared to pay a little bit more. I'm going to say Aveng. I like it. It's hot.
Hot for Simon Brown. Not immune to the current dire market conditions, Wilson Bailey Homes Ofcon reported a 3% decline in revenue, a 14% decline in operating profit, and a 20% decline in headline earnings in its June 2011 year-end results. The group is engaged in an expansion program into Greater Africa as well as internationally.
Wilson Bailey got a market cap of 6.8 billion, price earnings of 7.4, and that's more like what we're seeing in this industry at the moment. Dividend yield 3.2. Paul, let's start with you. Order book for them coming in at 16 odd billion from 12, a significant jump there, but I'm wondering how much we can really bank on these order books. I mean, at worst case, things are being cancelled or delayed, etc., etc. They might have got contracts at margins which aren't particularly attractive. 5 years ago, we saw an order book, and I think we kind of said, yeah, that's banked. Now they're maybe a little more flexible.
Yeah, I think in this environment you have to be, and I think a lot of these construction companies are now focusing on slightly shorter term projects, which they can almost be assured that they can bank the cash, as opposed to what we've seen in the past. And I think you're right. I think a lot of projects at the moment are hanging in the air and could easily be cancelled. But I think hopefully this phase is going away, and I think a lot still depends on what happens in China, and if the East continues to pump, as it were, I think we could see the likes of Wilson Bailey Homes continue to improve.
Gerbrand, Paul and Simon touching on that order book and a number of projects. I want to zoom in specifically now on the accounting principles that are used by these construction companies. They use the percentage completion basis, and it makes it really hard to determine the profits that are due to shareholders in any given year. So the question then becomes, well, when things go horribly wrong, they end up having to reverse any prior profits, or they end up having to provide for potential losses. How can we be sure that we're going to be getting what we're told we're going to get, and can we even know what it is exactly we're going to be getting?
Yeah, look, I think that depends on management as well. And I mean, you can have a huge order book and it might not be as quality work as you expected. The margins might be very small on those contracts, etc. And it's probably not the right work to take on. We know from history that Wilson Bailey has been probably the best construction company out there. If you look at it over the last 12, 18 months, they've only fallen with their earnings about 20%. We know there's a few projects that they're still busy with, like the Kusile, etc., power station, which is probably holding up some of these earnings, but at least that order book is looking healthy as well. And we know from past experience that these guys do not take work that doesn't have enough margin in it for them to actually make money.
So they're actually prepared to pick and choose rather than just sign almost anything. Again, they're in 50% of the order book outside of South Africa, and they've been outside of Africa. Let's put it to you. Again, it's off Australasia or Australia, and again, the margins there are under pressure. Yeah. But what I like about it is this isn't suddenly they wake up and find a tough spot and say, we've got to diversify. They'd been working at this long before it became tough.
Yeah, and I think they realized that this period that we went through in South Africa from, let's say, 2006 to 2010 was going to dry up, and they had to find a different revenue streams. And I think what they've seen especially in Australia has definitely bolstered their revenue, and I'm sure it's been seen in the order books that we've seen in the last 18 months.
Let's focus on the probes now, Gerbrand, by the Competition Commission into the construction industry, because there have been a number of probes, as we're all aware. My question is, are the penalties a sufficient deterrent to prevent the companies from engaging in this anti-competitive behavior? And secondly, with markets what they are, JVs and consortia necessarily will be formed. Are those not the exact mechanisms that make it easier, or raise the likelihood, I should say, of the companies actually colluding because they have such close contact with one another?
Yeah, certainly. I think it was very easy for these guys because we know what the margins are in different various spaces that they do. So if one guy knows that he does make more margins and he's more efficient on the road work, he'll do the quoting on the same price for the roadworks and probably get the contract. So it wasn't too difficult for these guys to get away with it for a long time. But I think they've probably learned their lesson. I think the negativity around these competition commissions are probably more than what the penalty is on the share price. So I don't think any management team wants this hanging over their company, because we know uncertainty destroys value for shareholders on the JSE. So hopefully they've learned a lesson. I can't say that they have. Only time will tell.
Until the next probe comes.
But some of these practices were a long time ago, etc., etc. And it's not only this industry, but it is certainly necessary for South Africa to have a competition commission.
Paul, another strong balance sheet, practically debt-free, cash on hand 2.8 billion. They went through $1 billion, but they're still sitting on 2.8. And we're seeing it, and there's almost two halves in the JSE. Companies with really strong balance sheets and companies with really unstrong balance sheets. And these guys, certainly Wilson Bailey sitting on that strong side, they can carry themselves. They can manage through these tough times that they're seeing right now.
Yeah, and I think this is a feature we've seen within this environment. And I think what we were saying off air is that a lot of them are preparing themselves for the boom or for the times to come. And the nice thing about the likes of Wilson Bailey's and Aveng, they're sitting on tons of cash, and they can still pay decent dividends along the road, and at the same time still keep a bit of confidence from their shareholders, and at the same time target acquisitions the world over.
Sounding like you're going to give them a hot vote then, Paul.
I like the stock, and we've liked it for a very long time. It has recovered in the last 2-3 weeks, and I think from now on, I think we could see some strong interest in Wilson Bailey.
Gerbrand, how do you feel about Wilson Bailey? Hot or not?
I'm going for hot as well. It's going ex-dividend as well tomorrow, so I think you're getting R2.30 last day of trade tomorrow. And around about R100, I think if you have a 3-year view, you probably should get some of these shares.
Two hots for Wilson Bailey. Simon Brown, hot or not for you?
Yeah, another strong balance sheet, another dividend coming through, they can hold it. And Wilson Bailey, along with Hot Stoxx and along with Aveng, are my troika in the construction space, although it's Hot Stoxx, which I own almost half of the company. But Wilson Bailey, hot.